I started out with this weekly chart because it's just almost comical to look at. This is the life of the contract for August feeder cattle. Good afternoon, everyone. I am Relph with Comstock Investments. Appreciate you joining me back here on the Comstock channel. Going to keep this fairly short and sweet as I am recording late on Friday. Wanted to wait until after the cattle on feed numbers came out to record this. The cattle market has been the story of the entire commodity sector, and particularly the ag sector, throughout the week, as we've been making new highs every single day in nearly all contracts. The one exception throughout the week until today was front month live cattle. The August contract was failing to make new highs until we saw higher cash trade this week, which gave it the push to get a push up there to new all-time highs in that contract as well. And that is a continuation chart high. So we are at the highest prices we've ever seen across the board in the cattle complex. Then this afternoon, we get the cattle on feed report. We're going to take a look at some of these things here, at what's gone on this week and what's come out today. Looking first at the cattle on feed numbers, on feed basically in line with expectations, 98% versus estimate of 98.1. The big surprise was the placement number. We come in at 94%. when expectations were at 91.1. We knew that was going to be a little difficult to live up to, but throughout this year, we've had a few reports where the numbers look like they were pretty optimistic, and then we were able to exceed that from a bullish standpoint, come in even lower than expected on placements. So this was one of the exceptions so far where we did come out at 94%, higher than expected on the placements. That's going to probably give enough push to give a little reprieve from these high prices that we saw posted this week. Of course, that barring some significant jump or announcement that's going to make things shoot higher yet again. It seems like the market's been able to absorb about everything, and there's just really not been any major negativity throughout this entire ordeal. Marketings in July came in at 94%, right in line with expectations as well. So the reason I say we're probably due for a reprieve, and really at this point a much needed reprieve, is because of the market action that we've seen across the cattle complex throughout the week. Starting first with the August feeder cattle, I started out with this weekly chart because it's just almost comical to look at. This is the life of the contract for August feeder cattle. And you can see here, there was a little dip right at the beginning, and then it's just been straight up with very few exceptions. We have had some lower weeks along the way, but they've been very shallow and then right back to new highs. And we've talked about that a few times in these videos before as well. But this week, big blow off top here. I don't necessarily think that we've posted our all-time high this week, but this blow off is just huge, and it was significant on the charts as well. So I wanted to share that on the weekly chart. All the feeder cattle contracts basically look quite similar, but when you zoom back to the daily, you can see here we've been up for 6 straight days, been up 9 out of the last 10 sessions. There's just not been a break here, and we needed some kind of a trigger to give us just a little bit of a pullback. I don't expect we'll see a ton of weakness. I don't think we're going to be down for several weeks in a row or anything along those lines. Just some kind of a pullback, a retracement of some sort from this last little leg up would be a welcome sight for many at this point. Honestly, this market's been just ballistic and no one can seem to figure out what to do with it. Now, having said that, it has been a very methodical move, and it doesn't really matter what contract you're looking at. I'll flip over here to the September. It's the same deal. You're not looking at a chart that's full of gaps and jumps and toppy action. It's just been a march higher. And the same has been true of the cash market. The cash market gained about $14, $15 this week. Really remarkable stuff there as well in the feeder cattle cash. Now over to the live cattle. Like I said, this was the first time that we saw the August make a new high since posting the previous high on August 7th. We'd been unable to take that out until today. That high had sat at 239.47. We traded well above that, trading to a high of 240.72 today, before settling at 239.95. So we still did settle above that previous high. Again, a really good look here. However, I do think that the cattle on feed numbers with that higher placement is probably going to give us cause for just a little bit of a break in the action here. And of course, that'll hinge too on what the cash market does. On the fed cattle cash side, this week was really stout. We saw dress trade as high as 392. We saw live trade as high as 247 in areas of the north. Most of the trade, I would say, has been in the 387 to 390 dressed, while most of the live trade in the north has been done at 245. Southern trade's been a little softer. There's bids out there right now at 232. I don't think they're going to get any cattle bought at that price. There has been some 237 trade in Kansas. Then we saw some northern Kansas trade where the cattle were getting pulled into Nebraska, those numbers at 240 live. So what does this mean moving forward? Well, like I said, immediately I think we could look for some kind of a little corrective action. I don't know that we'll see it so much on the live cattle board as the fat cattle cash is keeping up pretty well, and I don't think we need to see quite the reprieve. However, I would expect to see a little bit of a pullback in the feeder cattle cash that just seems to be overheated here this week. And that being the case, especially with the August board holding about a $4 to $5 premium to the cash, some kind of a little break in the feeder cattle might pull the live cattle down just a little bit. Longer term, I don't think anybody knows where these numbers are going to take us. Right now, all signs point towards tighter supplies as we continue to move forward here. So where the break in the market's going to come from, I'm not quite sure. There are some targets out there that people are looking for, anywhere from 244 front month live cattle to 270. I've heard all over the place. It's almost like they're just putting numbers on the wall and then throwing a dart to see where it sticks. These feeder cattle at 360 in the front month, just crazy high. And they're bringing that kind of money. We heard of some significant volumes of very heavy feeder cattle, 9+ feeder cattle that were bringing huge numbers, $400, $3,500 a head in the barns just in the last 24 hours. The strength in the board is warranted by what we're seeing in the cash market. And I think as long as corn stays cheap, they're going to continue to go after these feeders pretty hot and heavy. What's going to cause a break? In my opinion, when you've got a 76% tariff on Brazilian beef imports and the Mexican border closed, until one of those two changes, you're going to continue to keep this market really hot. And I don't see the USDA being too aggressive in opening that Mexican border, at least until we see a significant cool down in temperatures where we're not so worried about the flies. And with regards to Brazil, obviously geopolitical things at play there that are well above my pay grade. We'll have to see some of that sort itself out before we'd see any major shifts there. So that's the bulk of the commentary today regarding the cattle. Going to just briefly run over. December corn finished Friday down a quarter penny at 411.5. However, that was up significantly as we traded 3 out of 5 sessions this week higher, and a couple of those were pretty good jumps, especially on Thursday. So for the week, we finished 6 1/4 cents higher in the December corn. November beans up 2.5 on Friday at 10.58.5. That was a 16-cent jump for the week in the November bean. Definitely some strength in the grain markets. That strength in the soybeans fueled by soybean oil, which was up huge each of the last 2 days and just completely reversed what had been a downtrending market beyond retracement levels. I mean, this is just a huge jump up in 2 sessions due to some decisive action coming from the EPA and from the USDA regarding small refiner exemptions. It wasn't a big win for U.S. agriculture, but at least they were making some decisions and putting things in place that have been tabled for the last 9 years. And some of these refiners did not get the exemptions they were looking for, although overall, I think most would consider it a win for the refiners at the end of the day. Some were denied, some were given partial exemptions. A story developing there, and at least it's leaning the right way, and we're starting to get some decisive action out of Washington, which is a win. Wheat continues to struggle. This trade on Friday was really disappointing after an intra-week reversal that we saw in both Chicago and Kansas City just a couple of days ago. We poked new lows, then trade up, finish higher, had an outside day higher in the December contract, and then saw some follow through yesterday, kind of had our hopes up. Today just gave it away and finished lower for the day. Energy markets have been fairly quiet. The metals saw a nice bump today off of the idea that the Fed is going to lower interest rates as early as next month and may be more aggressive at lowering interest rates as they probably elevate their inflation target from 2% to something closer to 2.5 to 3, most expecting like a 2.7 or somewhere along those lines. That did put some pressure on the dollar, down 90 points, which is always good for ag products, especially our exportable ag products. And that did kind of break down the chart and looks pretty weak here as we could see some lower trade next week. Equities, the winner on that same news as the Dow Jones futures, finishing up the day here up 845 points at a new all-time high. Pretty significant stuff going on there as well. So that's what we have going on here on Friday. On behalf of producer Brianne Jenkins, I am Eric Relph. We'll see you next time right here on the Comstock channel.
Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.